Have you ever heard of Diginex? Probably not, but trust me, you're going to start hearing this name a lot more. They're a small company on NASDAQ with huge ambitions, using AI and blockchain to help businesses manage their sustainability and ESG data. And with the global ESG reporting market set to explode from just over $1 billion today to more than $5 billion by 2029, Diginex might just be in the right place at the right time. Let's break it down: what they do, what's happening right now, and what could make this company a serious growth story, or a risky bet. Diginex, ticker symbol DGNX, is based in London and listed on NASDAQ. Their goal: to make it simple for companies to track, analyze, and report their sustainability performance, things like environmental impact, social responsibility, and governance standards. Think of it as the QuickBooks of ESG reporting, software that helps companies stay compliant with growing government regulations and investor demands. In their latest fiscal year ending March 2025, Diginex brought in $2 million in revenue, which is a 57% jump from the year before. That's solid growth, but they're still losing money, around $5.2 million last year. The good news? They've improved their balance sheet and raised capital, which gives them some breathing room to grow. Here's where things get bold. In June 2025, Diginex announced a massive $2 billion acquisition deal for a company called Resultix, an AI-driven marketing and data platform. That's a huge move for such a small company, but if it goes through, it could transform Diginex into a serious player in data analytics and AI. They also picked up another smaller company, MatterDK, focused on AI and data management. And in September, they pulled off an 8-for-1 stock split, giving shareholders 7 bonus shares for everyone they own. A sign they're trying to make the stock more accessible and liquid. So, what's the upside? First, the ESG market is exploding, and regulations are forcing companies to disclose more sustainability data than ever. Second, Diginex is building tech-first solutions with AI, blockchain, and analytics that automate all that complex reporting. Third, they're growing through partnerships, teaming up with big consulting firms like Baker Tilly and Russell Bedford to reach more clients worldwide. But it's not all green lights. Diginex is still tiny, just $2 million in revenue and no profits yet. They face stiff competition from major players like Workiva and MSCI, who already dominate this space, and that massive $2 billion acquisition, it could either make them or break them. Integration and financing risks are very real, so while the vision is exciting, this is definitely a high-risk, high-reward stock. Alright, let's do some quick math to see what's possible. If Diginex grows revenue by 20% a year, they'll hit about $3.5 million in 3 years. 50% a year, that's around $7 million. And if they double every year, that's about $16 million in revenue. Now, depending on what investors are willing to pay, say 1x to 6x sales, that gives a potential range of 15 cents to around $4 per share. So yeah, the upside is there, but it all comes down to execution. If you're following Diginex, keep an eye on these 5 things. Quarterly revenue growth. Are they really scaling? Acquisition success. Does the Resultix deal actually close? Recurring SaaS revenue. Are more clients locking into subscriptions? Cash flow. Can they manage burn without constant fundraising? Major partnerships or new clients. That's the best sign of traction. Here's the bottom line. Diginex is a tiny company with a bold vision, building tech for a fast-growing global sustainability market. They've got the right ideas, the right timing, and some seriously ambitious plans, but they're still at the early stage. If they execute, there could be major upside. If not, it's another small cap story that burns out before it takes off. So treat Diginex as a speculative growth play. Risky, yes, but potentially rewarding if the stars align. If you found this breakdown helpful, hit that like button, drop a comment, and let me know what company you want me to analyze next. I've got more deep dives on emerging tech stocks coming up, so make sure you subscribe and stay tuned.